Greetings and welcome to the ROI Clear podcast. My name is Ray Hightower, and today we are fortunate to have as our guest Mr. William Edwards. William Edwards is a tech company founder, having exited some years ago, and he's now a commercial real estate investor. So we're going to learn all about what he's done and his background. I'm looking forward to a very rich conversation with this man. So, ladies and gentlemen, please join me in welcoming Mr. William Edwards. Welcome, William.
Hey, Ray, thank you. Thank you for having me.
Glad to have you here, William. Very glad to have you here. And to kick things off, we're going to start with an elevator pitch. For those who are new to the ROI Clear podcast, William is on an elevator with someone he wants to influence. So we'll ask him, what would you say to that person in the course of an elevator ride?
Yeah, I would tell them that I put deals together, primarily multifamily, which is apartment deals, to help passive investors have cash flow, tax advantage cash flow. And would love to we're always looking for investors. So if you're interested in having a conversation, we'd love to continue that.
Excellent, excellent. And would you happen to be raising on a deal right now?
Not at the moment. I'm looking for deals.
Yes, yeah, always. We're always looking for deals or dollars with everything we do, right?
Correct.
Okay. Now you have a technology background. Why don't you tell us a little bit about that? You know, how you got started with that and how you ended up shifting into commercial real estate.
Yeah, so I had a business for 24 years with a business partner, and we sold in 2015. And we were value-add resellers and developers for what's called ERP software, is enterprise resource planning software, and CRM systems. So we sold the business systems that businesses, distributors, light manufacturers, heavy manufacturers use, right? So general ledger, accounts payable, accounts receivable, inventory management, sales order, work order, those types of systems, right? And then of course CRM, which is customer relationship management software. We sold that in 2015. At that point, the proceeds from that weren't enough to retire on. It wasn't enough to leave the W-2 world. So I continued in that same space in roles with other folks in the same line of business, either as a W-2 employee or as a 1099, so as a contract employee. Around 2018, I started getting to the point where, kind of my testimonial is I'm old enough now and long in the tooth and mature enough to have seen a couple of business cycles. So I remember 1989, 90, the Black Friday, Black Monday, depending on who you ask, what that was called, Y2K, right?
Yes.
2008, 2009 era that, with the recession we had during that. And at this point, we didn't have COVID, but it seems about every 10 years, we have an economic cycle that hits. And I started thinking forward, right, that I didn't want to be in a position of getting ready to retire or worse yet, retire, and then have, what my life savings what I'd been able to accumulate in my life savings dwindle or get eaten away or disappear.
Right.
So I started looking for alternatives. Where else can I put those assets? And admittedly, and I agree, and I've got a lot of money still in equities and stocks and things in the stock market, ETFs. But at a macro level, if you look at the trend from 1930s, 40s to today, the trend obviously looks very good. At a micro level, though, mine at least looks like an EKG chart, right?
Yes, yes.
There's ups and downs, ups and downs. The trend over time is up, but some of those trend cycles are 10, 12, 15, 20 years. And if I retire, do I have 20 years to something stabilize, or am I going to be destitute for the majority of that while it's trying to recover, right? So I started looking at what other alternatives are there. Where else can I put some of that money in those funds? And real estate checked a lot of those boxes for me. In my case, and everybody's in a different season of life. Everybody has different family situations. But in my case, multifamily real estate checked the most of those boxes. But I considered single family, considered self-storage, retail, office, multifamily. And for me and where I was going, and I think for most people, multifamily was the best option. Evaluating how multifamily had done in the last downturn of all of the industrial commercial asset classes in the 2008-9 era, it actually performed the best. It didn't lose as much as any of those other classes did, and recovered the quickest.
Right.
So for me, that got me going, right? And that's kind of where I'm going to focus. And so I started investing actually as a limited partner, which
Mhm.
for those who aren't familiar with all the lingo, we like most industries have a lot of what I call TLAs, 3-letter
Yep.
acronyms, right?
Yes.
So I'll try to catch myself and explain what I mean by that. But in a deal that is sponsored by a group and they raise money from investors, that's typically structured in what's called a syndication, right? So the people who are bringing capital deal that that the sponsors are raising money from are the limited partners. The general partners they're finding the deal, they're underwriting the deal, they're putting the deal together, they're putting the lending together, they're signing on the loans, in addition to the fundraising. Then they're operating the deal as well. And then they make decisions about how the deal is operated and if and when to sell or if and when to refinance and all that. So I started investing as a limited partner in other people's multifamily deals in 2018, late 2018, to get to the point where I wanted to learn how the system worked without really committing too much to
Mm.
it yet, to
Hmm.
kind of get my feet wet.
Right.
And that started a process of continuing to invest as a limited partner. So to date, I'm in probably 5,000 units across 12 different deals, across about 6 or 7 different sponsors. So some
Hmm.
sponsors I'm in more deals than others, and some I'm just in one deal with.
Right.
But that started the process 2018. 2019, I bought my own property, my own first property, which was a 37 unit,
Hmm.
2012 construction. So it was relatively recent. Wasn't going to need a lot of value add.
Where's that
Um,
located geographically? Where's that?
it's in Fayetteville, North Carolina,
Okay, got it.
and
Okay.
I'm in Charlotte, by the way. So
Mhm.
close, but not in my direct backyard. It's a couple hour drive to get there. It's not,
Right.
and I'm not self managing it.
Yep.
And actually, I wasn't self-managing. We disposed and let that property go in 2021.
Hmm.
Um, but it was a situation where we bought it, we did well with it. Um, we did some things right.
Hmm.
We did a refinance mid-cycle, and at that point, we were able to trim the rates from the initial rate was 5.2. We got it refinanced at 3.1. So that's when
Oh,
rates were going down, not up like they are
yes.
today.
Yeah. Oh, we remember those
um,
days.
we appealed the property tax valuation on it and got the 35-40% cut on property taxes on the property. So we operated it very well.
Hmm.
We replaced a property management company. Initially, we didn't use the same one that was in place, from the sellers. We got our own. And it was a great property. And in 2021, we started getting unsolicited offers, and we
Yes.
bought it. My wife and I bought it in our personal portfolio, really, to kind of be a retirement property, and with the expectation that we were going to continue to invest in multifamily.
Hmm.
But it was going to be at least a 10 or 15-year hold. I mean, it was not by any means going to be a fix and flip at scale, right? It was
Right.
going to be a buy and hold. But we started getting some offers that we really had to consider, and it was
Hmm.
the right decision. So we sold that property and replaced it with an 84 unit with with some partners,
Yeah.
and then a 72 unit, and then we purchased a 32 unit last year.
Wonderful. Now, your deals, are you doing JVs? You know, you're doing syndications now, but that first deal in Fayetteville and then the 84 unit, were those JVs or were those syndications?
The first deal was just a sole deal. That was a mom and
Oh,
pop. So we bought
okay.
that with our personal funds.
Okay.
The deal, the 84 unit and the 72 unit are with other deals, and those are syndicated deals. And the
Hmm.
32 unit is actually with another group of folks, different partnership group, but it's a syndicated deal as well.
Yeah. Excellent. So you've had a little bit of a taste of, or a taste of multiple vehicles for financing and deal structuring, which is good, which means that you can have conversations about all of those.
Yeah, I've worn a lot of hats.
Yeah, yeah, many hats. Yeah. Now let's get back to your investment decisions. You talked about how the stock market, it looks like an EKG, and I hear you there. You and I are both investors in tech stocks. Real estate is more stable over time, and the shifts are slower over time. Although we can take advantage of things like forced appreciation, where you go in and make improvements like you've done, or you can take advantage of a decrease in interest rates to refi, and there's advantages you get there. Another vehicle besides the stock market, besides real estate, I got to bring this up, crypto. You and I had, a few years ago, you and I were at dinner on a boat in
We
Florida.
were.
Yeah, we were, and we were there were four of us there, you and I and two other people, and one guy, and I got to reach out to him because I haven't talked to him in a while, but I got to reach out to him. Spent the whole night talking about crypto, Bitcoin this, Bitcoin that, blockchain this, and all of that. I got to ask you, given your technology background and your investment background and your real estate background, what are your thoughts on this whole crypto market, crypto and blockchain? I regard them as separate for reasons that you and I can discuss. But what are your thoughts on those as an investment, as investment vehicles versus tools to get stuff done?
Yeah, so that was an interesting dinner, and it was quite informative. I did learn a lot.
Yes.
But to directly answer your question, I agree. I think that blockchain is a technology and can be a platform that crypto transactions run across, but also other types of transactions going forward, right? Smart
Mm-hmm.
contracts and things like that. Then of course you have the cryptocurrency, which is a currency, and it's a commodity, right? Or
Mm-hmm.
can be a commodity. It's expected to be a commodity.
Yeah.
I don't know that it's the big hedge against inflation, or a hedge against devaluing of the dollar or another fiat currency. I've got very small investments in crypto. I have some,
Mm-hmm.
but almost as a sandbox, just to kind of test the waters and watch it and monitor it. I'm not a
Yeah.
heavy trader in it.
Mm-hmm.
I don't have any significant investment in it. I may learn down the road that that was a mistake. I don't know, but so far, my what makes me sleep well at night is knowing that I have a hard, real asset
Mm-hmm.
that's part of my investment portfolio.
Yeah.
Um, and crypto can be, an EKG on steroids.
Yeah, yeah. We never know. That is, well, we'll know some years in the future, but I've got to agree with you. One advantage of real estate is that on the first day of every month, you have cash flow coming in.
Huge, huge,
That's a
huge.
big deal. And it's something that's regarded by banks. Face it, right now, banks are the ones that really define and rule our economy right now. And they regard real estate as a hard asset. So right now, that's the position that we're in. But it
It's
will
a
be
hard
good.
asset. It's cash flowing, right? And
Yes,
of course, you
yes,
could
yes.
invest in other. And that's what's great about real estate. There's lots of ways to slice and dice deals and opportunities and asset classes, right?
Mm-hmm.
But the types of deals and properties you and I are in and looking at, and we recommend others,
Mm-hmm.
are cash flowing properties, right? Multifamily in our case, predominantly. But it's cash flow, and the cash flow off of that allows limited partner investors to be passive. They don't have to worry about the three T's, the tenants, the termites, and the
Yeah,
toilets,
yeah.
right? Because you
Yes.
and I are managing that, or managing a property manager that we've hired is going to manage that.
Right.
It's the most tax advantaged real estate income in general, is the most tax advantaged and tax preferred income source that you can have over W-2 income, earned income, any other types of investments you're going to have, investment income. Um,
Right.
and it's real. You can put your finger on it, right?
Yep. There it is. There it is.
And it is a hedge against inflation,
It
right? So
is.
particularly in inflationary periods, just to kind of explain that
Mm-hmm.
to actually other big benefits. It's an inflation hedge, and I mentioned that in the context of cryptocurrency, but um, as when we're in inflationary times, if you had $10,000 in the bank last year, its purchasing power this year is probably 94,000, right? 9,400. I'm sorry.
Yeah, yeah, right, right.
So it's almost rotting away. The purchasing power
Mm-hmm.
is rotting away over time.
Yep.
Well, things go up over time. Expenses go up, but rents also go up in inflationary periods of time, right? So it's much more able to keep pace with, if not outpace, the current rates of inflation, right? And the
Right.
other thing about real estate in general, multifamily specifically, is the ability to use leverage to buy assets. So instead of having to buy a Bank of America stock, and you have to have, if you buy $100,000 of Bank of America stock, you pretty much got to have $100,000 in cash to go buy it.
Right.
To buy $100,000 or $1 million worth of real estate, you really, in many cases, only have to have about 250,000, and you can borrow the balance of that, and then the property performs through the cash flow that throws off, the ability to service the debt and
Mhm.
provide a return to the investors. And then at some point in the business plan cycle, you may or may not have refinance, which could be a cash out refi if it's
Right.
appreciated enough. Loan proceeds are non-taxable, so you could
Mhm.
get a portion, if not all, effectively your money back tax free. Well, the return of your capital is tax free. This is additional
Yes.
payout that's tax free. And then when you dispose of the property and liquidate it into the business plan, that's tax advantaged funds as well. So it's like I said, for me and where I am in my season of life and what my goals are, it checks the most boxes.
Yeah, there it is. And then there's that stability, of course, as a hard asset, the idea of it going to zero as opposed to something on the New York Stock Exchange or NASDAQ that could go to zero. That's
True.
just going to happen. It's not
True.
likely.
Absolutely.
Now, you've mentioned a few times that you don't manage the assets yourself. Some people who are new to our business are, what do you mean? You mentioned toilets, termites, and tenants and all of that. How do you insulate yourself from that? It sounds like you're using third-party property management. Can you tell us a little bit about how you put that in place on your properties?
Yeah, it is, and that's actually the approach that I do, and particularly as you scale, right, and
Mhm.
you acquire more and more units in a property, or you more properties with higher unit counts, or doors as we call them, right. So
Right, right.
if you had an apartment community with 10 units in it, that you could, depending on where it is and what your skill set is and your time and availability, can you manage, and you could if it's small and your situation is conducive to that, could you manage marketing the property when you have vacancies? Could you manage
Mm.
cleaning it and turning it and painting it, replacing the carpet when you have tenant turnover, leasing up, doing the evictions in case you need to do evictions,
Hmm.
service calls, right, whether you're going to personally take care of the plumbing issue or the electrical issue or the HVAC issue, or if you're just going to dispatch that in effect to a
Hmm.
local service company that you might have a relationship with. You could self-manage that. When you get to a certain size, you can't, right? When you
Yeah,
get
right.
to particularly, if you get in 50 and above, it's very difficult to do that yourself. And if you have multiple properties like that, it's impossible. You
Hmm.
just can't. You have to have a team to do that. So what the majority of apartment communities of any scale are structured, the way they're set up and structured, are with professional property management companies. So me as a syndicator, or me as an owner, I will hire a third-party professional property management company to manage the property. So they're going to handle the lease ups, they're going to handle the turns, they're going to handle the vendors that come in, the cleaning crew, the dumpsters. If we need to change vendors on the dumpsters,
Yeah, yeah.
the landscape contracts, they're going to manage all of that. And of course, you have evictions and you need to do the filings and follow up and collections,
Hmm.
disbursements, getting the vendors paid, paying out the investors each month. They are set up and have systems in place to do that. Now, my job when I do that is to manage I can't just hand it off, right, to the
Hmm.
property management company. I have to manage the property management company because I have a business plan with certain metrics, and I need to make sure that the tenants are being taken care of. And
Mm.
I actually prefer to call them residents versus tenants.
Yes,
I mean, this
right,
is their
right.
this is their home.
This is their home.
This is
Yeah,
their
yeah.
community, right? And I need to provide a safe, clean place for them to live and make sure that's being
Sure.
taken care of. So typically, we'll have at least a weekly standing call. We can have ad hoc calls, and we'll communicate through text or emails throughout the week if something
Hmm.
exceptional comes up. But we'll have weekly standing calls, and we'll go over what's the outstanding work orders, what's the rent roll look like, which leases are expiring in the next intermediate period of time, what terms do we have that are active, are there any issues? Oh gosh, we've had a run on HVAC units lately. What's going on, right? Maybe people aren't
Hmm.
changing their filters. We need to remind people you need to change your filters on a regular basis.
Right.
Um, but yeah, you're not turning the the property over to a third party property manager. They're responsible for the daily operation, and then you're partnering with them in a collaborative way on a regular basis to stay on top of things to make sure things are getting done and taken care of.
Yep. I like the way you express that. You're partnering with them. It's very much a partnership.
Yes.
Yeah, and we
Yes.
have to do the weekly asset management meetings. Of course, we're checking in with each other just to make sure we communicate. I also like the idea of saying residents instead of tenants. You know, words, certain words matter. I was about to say words matter, not some words don't matter as
Well, they
well. But
carry certain connotations and
yes,
how people receive those, right? And
yes,
that's their home, right? It's
right,
an investment for me.
yes,
It's their home. That's where they live.
yeah,
They may be raising
yeah.
a family there, right?
Mm-hmm. It's definitely a big deal. Now, given this is their home, tell us about some of the things that you do. Say you've just taken over an asset, first 30 days. What are some of the things that you do for the residents, for the property management firm? Do you keep the previous property management firm? What are some things you do in your first 30 days after taking over an asset?
As far as keeping them, it would depend. In the properties that I've purchased or been involved in, we haven't. We've made a change, but that's just, we do our own assessment, right? And usually in the sales cycle, you have plenty of time, and when you're doing your due diligence, there's a lot of things happening in addition to the typical things like surveys and inspections and stuff like that. You're also should be identifying, or you will need to be identifying, who the property management team is going to be. And it's a team, it's a team sport.
Right.
And whether that's the existing team that's just going to transition over with the property to you, or whether you bring in another team in. So there's an evaluation that takes place, and they have to be a right fit for you and your culture.
Mm-hmm.
I'm doing air quotes over here, culture.
Yeah, air quote. Yeah,
But it's got to be a fit. And if it's
yeah.
not, then down the road that might necessitate a change. But long story short, if you're bringing someone in the first 30 days, obviously notifying the tenants and letting them know that there's a new property management, new ownership group and a new property management company
Mm-hmm.
in place. Here's how you communicate with them. Here's where you're going to pay your security deposits rolled over, right? Don't worry, you're not
Right.
losing any money.
Yeah.
Your leases are rolling over. They're still in effect through whatever duration. You're not, because we bought the property, you're not getting pushed out of your unit
Mm-hmm.
because there's new ownership. Um, we are going to have, here's what our plans are for the property. We're going to do some improvements to the grounds. We're going to start renovating units if it's a value add situation, right?
Yep.
Which means that, sometimes if it's a recent vintage property, you don't need to do anything necessarily up front, but over time, just like a single family home, after 20 years, 15, 20 years, it starts to look tired. It's not as
Yeah.
attractive to people that will live there, or new prospective tenants, as maybe the property down the street or half a mile away that's newer vintage or brand new. And
Mhm.
you're competing with that pool of prospective residents with the newer properties or the properties that have been renovated. It could be a 50-year-old property, but if it's been renovated in the last year, it's going to look and feel better and nicer, and be a
Right.
nicer place to live than the one that's 50 years old that has never been touched, right? So explain to them kind of, here's what we're going to do. We do typically do exterior updates first,
Mm-hmm.
for really two reasons. One is to give the residents the feel that, yeah, we are doing something and improve the
Mm-hmm.
sense of community. And when you're bringing in new tenants, you got to want them to drive in the driveway, right?
Mm-hmm.
If they do a drive by, even if they saw it online and they saw a unit and they drive to the property, and the property the sign's falling down, the grass is not mowed, the pool has green algae in it,
Mm-hmm.
you're never going to get them in the leasing office, right? You're
Right.
just not,
Right.
right? So do the things to improve the community externally, make it presentable, make it look better for new prospects, but also help the people that are living there now appreciate where they live and reap the benefits of that.
Yeah. Pride of homeship.
Correct.
Okay. Excellent. Now we've been talking so far on the commercial real estate portion of our conversation. We've been talking mainly about multifamily. Have you or would you look at other asset classes? Would you look at office or retail or industrial or vacant land or any of those?
So I have to date, well, until the last year, been
Mhm.
exclusively investing in multifamily. And all of my deals that I'm either in the syndication with or that I've purchased have been multifamily deals. As a
Mhm.
limited partner, I am in now a one deal that is a self-storage fund. That particular fund owns 5 different self-storage properties. So I've
Mhm.
got some investment money in that. And I have one other investment that's in a land entitlement deal that was vacant land, right? It's a
Mhm.
syndicated deal. But getting the property entitled so that it's available for a developer to come in and build is another investment that I'm in. But I'm
Right.
still 90% multifamily.
Right, right. Okay. And what would you say is your thought process? You talked a little bit about it at the beginning, but if we compare and contrast multifamily versus the other asset classes, what draws you to multifamily over the other asset classes?
Well, I've had a business. I had a business for a long time, and actually, as part of our business, my business partner and I formed another company and built a commercial office building, and then leased space to ourselves out of that commercial office. So I had a
Mhm.
little bit of experience in that. But having been a software vendor that sells business management software, I was in and out of a lot of businesses for decades, right? And I
Mhm.
saw how a lot of things work. So the thing that scared me about, and I who knew COVID was going to happen, right?
Mhm.
About office in particular is that in an office property, if you have a tenant move, the next tenant that's coming in is in all likelihood gonna probably need the property reconfigured, right,
Mhm.
to service their business needs. So, and I'm making this up just out of whole cloth here, but if you had a property that was occupied, or a tenant that was a dentist, right, or medical, just say medical, right, it's probably uniquely configured for their business needs, with a waiting room, maybe a
Mhm.
lab area and something else, right? Well, the next thing that comes in that's a marketing company, they're not going to need that. So you have some expense doing that. And my perception was there could be extended downtimes between tenants, and
Right.
that was unattractive. Um, Retail, if it's neighborhood services, I think that's probably, even through COVID, those did well, right?
Yeah.
If certain types of retail didn't, particularly when we were on lockdowns, but
Mhm.
people need neighborhood level services. So if it's retail with anchored by neighborhood service type tenants, that's probably not bad. Self
Yeah.
storage, again, I'm dipping my toe in that.
Mhm.
But there's a lot of, industrial. There's industrial distribution. There's a lot of different asset classes, and some I'm just not familiar enough to really have an opinion on yet.
Right.
But those are the ones that I considered, and chose. For me, they checked boxes, but the
Yeah.
most boxes for me was multifamily.
Got it. Okay. Good. I I have massive thought process. There we go. We're
Well,
coming to our time together. This has gone really quick, and I'm grateful for the chance we've had to talk. Last time we sat down to talk for this period of time, neither one of us got to talk. We were mostly listening. That's when we were on
yeah,
that. So
and I
but
did
that
learn a
was good.
lot.
That's what's that?
I learned a lot.
Oh yeah, yeah, we did. Yeah, we did learn a lot. It was a good time. What are you reading right now? What are you reading that you would recommend to our audience, or what podcasts are you listening to? How do you keep feeding new information into your brain?
So I've got a stack of books right now that I need to get through.
Mhm.
And so it's been a couple of months since I've picked up a new volume. I've purchased some things that I haven't gotten to. I do continue to listen to podcasts and YouTube videos.
Yes.
And I find that most often I'm getting that time done because I do have a family, just like everybody, not everybody, but most of us do, are involved in family commitment. So I have a teenage daughter, a teenage son. My daughter's involved in soccer. There's a lot of windshield time, and going to visit and meet with vendors and
Mhm.
brokers and site visits.
Right, right.
Rather than listening to XM radio, I most frequently will find something online, YouTube, play it through the audio system in the vehicle, and listen to that as I drive. So that's
Yes.
currently how I'm getting most of my education and staying apprised and learning.
Yep. Okay. Windshield University.
There you go. There you go.
There it is. There it is. And how can people get in touch with you?
Absolutely. So either my website or email. So website, the company name is GDD Invest,
Mhm.
golf dog dog, invest.com. There's a story behind that. It means nothing. It's just an internal family joke. So I'll explain it. My dog's
Please
name is
do.
Gabby. Is Gabby.
Yeah, yeah, okay.
So Gabby the dog, GDD. It means nothing. It's silly. It's silly. But it allowed me to get a domain name that was kind of short,
Yeah,
that was
yeah.
available. Nobody else had it.
Yes. Right.
So that's where that came from. So it's william.edwards@gddinvest.com for the email, or www.gddinvest.com.
I love the name, and it's unique and it's short and it's easy to spell. And with that story, no one will ever forget the name.
Well,
William
thank you.
Edwards, it has been a pleasure speaking with you today on the ROI Clear podcast. Thank you for being with us.
Glad to be a guest. Thank you.